rocking.
All right. So bottom line is, as I was talking this morning,
we left yesterday with a lot of unusual volume,
and not just do I look for unusual volume activity in the overall option market, but what I look for is my indicators to give me ideas
that there is
a change coming in certain spaces.
So we use
the radar screen. And what we just see on the radar screen right now, gang,
is that
we are forming yesterday the Dow formed a doji. On balance volume made a secondary lower low, which is not healthy. And here it shows, but in the momentum indicator,
it's actually
showing kind of convergence.
When we get into
what we call a potential A, B, C, and if we broke support, the AB wave add to C would give you D measurement, and it did. It pretty much more or less gave us that area of support in the spiders and again in the Dow.
So this was again similar type of pattern. A, B, and then C. So the distance of AB extend and then add it to C gives you D. Sometimes it happens exactly, but it's the progression of the wave that we look for. A, B, C, D wave. Now, what about when that completes and you get a buy signal? How far up can a market go? The general rule is markets test the high of the C wave. That's it.
There's a lot of resistance, and there's a market that could get right back up to the 258, 260.
As I said
earlier, yesterday and the day before,
this is
a high, an all-time high.
It does not have the characteristics of an all-time high, meaning the breadth of the market made new breakout highs. It supported that. It suggests that the market, even if this is a bear market going into 2025, or recession is looming, if there's retaliatory tariffs and the market is afraid, or no one wants to buy stocks, and everyone abolishes stocks in their portfolio, and stocks go to zero. Amazon goes back to $10 a share, pre-IPO stuff. I mean, cats, dogs, biblical sell-off, like in Ghostbusters, just destroys the market, the world. The 1929 crash. Well, I think technical analysis would help us to seed through that. I don't have that
reading right now.
But what we do have
is the potential,
if this is a market that recovers and anything positive happens, at the very least, we should go back and test 258, 260, and then finally, if anything, before market really wants to evolve to a downshot. Just like over here, we tested a high. All right, so this was back last October before the big meltdown. We had an A, B wave. It came back up, formed another wave down. So we should see an upside minimum objective in the Dow to test this relative area, and that would be maybe we go a little bit higher.
I'm not sure.
But if the volume starts to kick into high gear, meaning if by chance we get a positive momentum reading, like one of these green bars over here,
the moving average component crosses over.
If even on balance volume crosses above our moving average concept. If we do generate a high closed doji and a last conditional change, I don't know where the market will end today, but using even just a simple rule of thumb of 1-to-1 risk-reward ratio, it actually gets the market back up to, right near that area. Give or take a couple extra days of positive things just to freak out all the shorts, you're up to 260. Now, it'll not be important how the market opens. It's going to be how the market closes and it's important.
Today's idea was the fact that we were starting to see,
and just to reemphasize, this is bizarre market analytics. Bizarre. Didn't trust the market to be short at the hold down in here. You all know that. It's not just my opinion. It's also written right in front of us with the weekly thoughts and observation. Now this is the weekly analysis. We held quarterly pivot, which is bizarre. Quarterly pivot. This is bizarre behavior for any market in the Russell. Look at the NASDAQ composite. Look at the NYSE. But more importantly, what's bizarre is the cumulative advanced decline. I don't know where the market's going to close. It's after all only Tuesday at 10:31 in the morning. I don't know where the market's going to close today, but I can tell you, if it closed here on Friday, we're back up to positive readings with the advanced decline, which is bizarre in the S&Ps. We're in a positive mode in the Dow, and that's what I was focusing on right now. Dow component stocks. Looking at the advanced decline numbers right now, The Dow on an end-of-week basis is actually supporting the fact that the market is what? That's not an all-time high. So typically speaking, markets if this is an all-time high, and let's say people say that's a triple crown, triple top in the market. Okay, great. But this particular high right there, that particular high came at the expense of new highs in the advanced decline. Meaning, look, we broke out of the 2018 high. We broke out of the early 2018 high. The advanced decline shot up and supports new highs in the market, or at least does not suggest that this particular high was a failed triple top. Now it looks like it is, and I get that. But let's just say this last peak, we should see maybe one last test of that peak if this market is to crash forever. Why? Because I'm putting emphasis on the advanced decline of the Dow Jones Industrial Average. I'm also looking at the volume reading, which, by the way, actually supported the strength of that last peak that we had in April. So the Dow actually see further gains going into end of the quarter for whatever reason. And don't forget, June is the last month of the second quarter. So we really don't have what? A complete quarter under our belts to look at earnings going forward. Wall Street is projecting really massive downgrade of earnings because they think maybe the month of May was tough, and maybe they're projecting June's tough. If June's not tough, then we've got a real surprise for bears in the market. So as long as this support number one, as long as that support held right there, and that is a very strong support. You just got support everywhere in this market. Look at that swing area. It's just a huge mathematical hodgepodge of pivot analysis on longer term. And until you close below support holds, we should go up. So I'm prognosticating upside. All right, so what does that mean? I got a support here that might hold in the Dow on the weekly basis. Let's double check something on the daily analysis real quick. All right. So today we're going to generate a fresh new PTS buy signal. The advanced decline on the daily did make a newer low. Meaning we took out subsequent. We have a series of lower high, lower low. So even if we go back up and we want to say, all right, the advanced decline, we should see at the very least a retest of that high. So don't be short now. Let's look at the condition of this upside. Today's model, or at least today's insight, was to buy dips in this market, and that was where we're at for right now. Okay. So I just wanted to go over that one more time. I do not see any unusual volume activity in the Dow by any stretch of the imagination. That's what's interesting using bigger swing. I just have a 257.77 expiration, which 4,000 to me, that's probably someone came in on some short calls. They were short those premiums maybe last week. You got 4,300. Maybe they bought a couple extra just to flip the position. Watch at the end of the day tomorrow. Obviously, if this number open interest increases by let's say 4,000, and that's a 7,000 or 8,000 reading. That means that someone initiated or added to a very cheap option for the next 7 days. And I don't know what they think's happening, or maybe they're positioning themselves for a big recovery. Again, that's 257 for 7 days, a week away, and the market's trading at almost 252. So it's 500 Dow point rally. At least they don't feel comfortable being still short that strike. If they were covering that strike, and if they are initiating a new long position in that strike, they feel that 500 points gives them the willy. Now, can you say someone's selling that? Yes, because for every buyer there's a seller in the option. But someone is initiating a position somehow, either an offset or adding. So we'll find out more importantly what the market looks like going into tomorrow's open interest. But as it is right now, I don't have any real special open interest increasing in diamond calls or any activity so far today. All right. So here we are at a market breach up into 2880, and then I'll update you as the morning progresses further. All right. So basically now we have our breakout in the market. How do you trade this? Are we going to get a pullback in the market? I would say if we get a 60, this is a 60-minute ES, and we close greater than weekly pivot, still got upside resistance next target up in here. So anyway, what difference a day makes? Is it Tuesday turnaround? Is it other things going on? Is it just common sense? Is it common sense that maybe Tesla's too cheap? Is it common sense that Tesla's going to race now? Yesterday we were afraid that we have a 175, 170 credit put spread with a 205, 210 call spread. That's the iron condor. We sold at premium, looking for theta decay in the market, not to do anything. Well, here it is, 188.5. Yesterday we were afraid, or some people were afraid, that we may be executed on the short side. Now this is the trade that we tweeted about in the trading room, and I did a short video on why do we look at an iron condor that maturity date that we selected, because we look at theta decay. So by the end of the day, if just maybe Tesla sticks around 190, that's all right. Maybe we just buy back the short put spread side, and we roll that up, or we can just execute, get out of the trade entirely, and take the small profit that we have. Anyway, we'll leave that towards the end of the day. Next, bonds. Putting out the trade recommendation to buy put spreads in bond made sense. I mean, I, after all, started trading bonds in 1984. That's my claim to fame as far as even also trading bond options. Many people know my prowess for picking directions, and my performance in 1986 was my field day heyday. Needless to say, it was phenomenal. Those were great days. But now we have equities taking over as far as options and individual stocks. So what do? Well, we do have some good stock selections, and I just put out an action alert to look at start scaling XOP. I like Micron Technologies MU today, small position, pot grower. We were looking for Tilray to at least generate some type of a buy signal, and here we have Tilray had generated a 60-minute PPS buy signal finally. So we've got at least maybe some conviction, and then also notice that as the price was declining here yesterday, that was maybe liquidation. Anyone that short that stock, I'd be a little bit nervous. And maybe this is a little delayed reaction from the federal government CBD hearing that FDA did, but I don't think that sector is going away, and I've already given my opinion about why we're going to probably need to increase production in pot, even though there's an oversupply supposedly in Oregon. But if people use that oversupply to create or make medicinal rub and THC compound, and people find the value in THC content for medicinal dermatological rubs for arthritic sufferers, meant that you won't be able to grow enough pot. So therefore, I think Tilray has that exposure, and that's why I like it. I also like the fact that we got this PMC reading, which is an express bullish convergence pattern in the market, and that's the relative strength. And usually speaking, when we get a kind of like a market that gives a relative strength, a PMC reading where you get prices making newer lows, and the relative strength does not make newer lows, I'm not saying it's going to be the greatest trade in the world, but generally speaking, you get liftoffs with convergent pattern. So that's kind of the setup that we currently have, and so I'm willing to take in a small position right now, and that's what I said, a third of capital on Tilray. It's early in the day. The market seems to be progressing well. Let's see how it progresses at the end of the day. So you scale in lightly on in initial positions in XOP, semiconductor, pot grower, General Electric also, by the way, and then we'll finalize what we're doing with Labu, which is the biotech. And I like biotech right now, and one of the main reasons I like the biotech space is notice that we have a buy signal above weekly pivot finally. The relative strength started to outperform the market yesterday afternoon. That was a good sign. This is an hour chart. Let's take a look at the daily chart. So biotech's been beaten down, politicized as like they're evil, they make too much money, and all of a sudden we're starting to hear some Democrat presidential candidates say, hey, we can't have socialized medicine. We can't do that. That was kind of interesting. These companies need to make money. We need these guys to help us cure diseases. Wow, that was kind of a switch from the last 3-4 years that we've been hearing the evil companies making profits in drugs. So Scarelli, he was a dirtbag, right? And charging what he did, and it was just a whack job to begin with. And what I would have to say is, at this point, is drug companies overdone? I mean, I guess we could look at a couple things. If you look at your low that we had here back in December, the recovery that we had from here in late April, or even taking the swing high that was made in March. All right, great. Take that, and the market went and made it retest that high. So if you just use a simple Fibonacci tool, you don't have to be a rocket scientist to figure out, you know what, it's a little bit more than 50%, but you came right into a gap area But what I like about this is not that the sell-off and predicting a pullback in market 50 or 618 or a Fibonacci retrace. I would look at what the near-term analysis suggests, and what the near-term analysis suggests is that the momentum of the decline has stalled in nature by looking at the pivot analysis. And when we get daily pivots starting to get up back above weekly pivot analysis, mathematically speaking, that's very positive. And so when I look at the relative strength and an uptick in volume, I also like that. So biotech, to me, it seems that we are getting a pretty sizable recovery. Let's go over to our scan using, again, we're using Thinkorswim. We're going to take buy signals here. We've got biotech. Let's hit how many new fresh biotech are generating 4-hour buy signals. Holy bejee willikers, Batman. 47 names, just the 4 hour. That's a half a day. And are any of these on any decent volume increases? So you can clearly see we've got a lot of different names. There are a lot of these are small caps. There's so many right now. It does not suggest that this is a slight recovery. This suggests that there's a lot of money. Biogen, by the way, already has 400,000 volume in the first 4 hours today. Let's take a look at end of day. Are any new fresh signals being populated right now on heavy duty volume? And so for that, here's where I use my trade station and combining the two types of indicators, or the technique that I like to look for, finding out whether or not stocks have legs or is it a dead cat bounce. So first and foremost, you clearly see, I'll bring this into speed. All right, where are we with comparing old volume to new volume? And you'd say, is this a decent buy setup? All right, that's number one. Well, this is Celgene. Celgene's up 1.3 million, 10-day volume right here, 4 million. So it's fairly light. Gilead, 1.6, 5.7. It's fairly light. That's not fabulous. If we're already 50% with, let's say, half the day done, that would make sense. But this is kind of, to me, an iffy market because it is absolutely suggesting that it's not a great volume. What I do like, if you have to say, well, what do you like about the sector, is that I'm starting to get like Vertex over here. Something's going on there. It's 1/5 or let's call it, let's be generous, 1/3 of the volume today. But it's generating, maybe volume's not coming in there because people don't trust it. So it's going to be end of day to see the volume kick in a high gear, number one. Number two, we wanted to see these relative strength readings go from maybe red to fuchsia to bright blue, and that's what we want to look at. Amgen, by the way. Amgen, 1.6 million. Now that shows there's money going there, because that's one we can say, look at the overall 10-day volume, and I just go and format this and say, yep, 10-day volume. What's the average 10-day volume? That's pretty decent, because yesterday we had a volume day there as well. We generated follow-through, and there was some increased buying in Amgen on 185 strikes for the June 21st expiration. Yesterday, about 2,638 were traded with a 1,400 open interest. So that looks positive in Amgen and confirming that there is some buying going on. Let's take a look at the Amgen right now, AMGN, and say dead cat bounce, or does someone know something? So again, June 21st, 17 days to expiration. They were popping down some dough in the 185 strike. Yesterday we had 1,400 open interest with 2,600. Open interest went up about 2,000 positions. These are stupid cheap options. For every buyer there's a seller, but it says that someone was willing to put some money. And look at the calls, 3,000, 3,000, 3,000, 2,000. Look at the puts. Not as much as you would think we would see on the put side. Today we have 107, but got more call option volume going on June 21st. Maybe someone feels something's going on in Amgen between now and June 21st. All right, so here's a July 1 double nickel put. The market's at 174. So the market has more interest in upside balls near term, and they're selling longer duration put options out of the money for collecting some premium. So that, to me, is more of a bullish bias in a few of the names in biotech. So that to me is a positive in some of the things that I look at. How do I put my scans together? How do I look at whether or not a market truly is getting ready to get momentum? Well, I'm combining relative strength, volume, and I'm looking at the sector, the amount of stocks in the sector that are not just one name, but multiple names in that space that may be providing institutional, let's say, participation. Because after all, institutions, if they like a sector, they don't just get into one stock, they buy the sector. And that's what we're seeing today. We're seeing widespread participation in the, as far as the scans are providing us, widespread buying in the marketplace. And then finally, last but not least, let's take a 1 hour scan, and you'll say, gee, it's still a very strong concentration of names that are generating buys in the biotech. Lastly, I'll leave you with this. Let's go to the S&P 500. Let's just go to S&P 500 and find out how many new fresh 1 hour buy signals. No, let's go, how many new fresh daily buy signals are populating in the S&P 500. I mean, it's one thing to get a dead cat bounce. It's another to find out if we get fresh new buy signals. Because remember, PPS indicator, it takes a lot to generate and flip from sell momentum to a buy signal. Those are those arrows. Notice that today we've got most of the energy space, which is XOP, gotten its ass kicked, and I mean its ass kicked, and it's down to levels not seen since 2016. We have chemicals, we have aerospace defense, industrials, banks, regional banks, BB&T, H-band. We see a lot of the, as you can tell right here, a lot of these are regional banks, untrust regions. So money's coming in, and I think maybe that's what the Fed in their conference in Chicago is alluding to. It's helping the small cap name bank, regional banks move up. Also, finally, lastly, Texas Instruments is up, semiconductors are up, all of that. And out of all of the semiconductors, Micron's the one that I think has better performance moving forward. 11 million shares today already. Keep your eye on that. Thanks for watching. I hope that gives you insights of A, how do I utilize my scans? What do we look for confirmation? And how do we differentiate between a day we should be selling and a day we should be buying dips? This is part of the process. Thanks for watching.